Good evening, everybody. We get a lot of people asking about the entry strategies. How do you work the entry strategies? And it's kind of very simple logic. Which is basically common sense is if we see something reversing, that we got a reversal signal, what do we want to see the next day? We want to see the bullish confirmation. So what is the first priority for putting on a trade? Obviously, it's finding the best trades. So we just use common sense analysis. What are the candlestick signals telling us? There's been a change of investor sentiment. Next, how do we enter the trade and exit the trades at the optimal times? So the first step that we take every morning, or should be looking at every morning, is which direction is the market going? Are we in kind of a trend like this? Are we in a trend like this? Are we kind of sideways? Those are what kind of dictate how heavy we want to be, either long or short or a combination of both. Now, here's the one element that most people do not factor into their investing. I say that on a general basis because I never did. 30% of the trades you're probably going to make aren't going to work. Now, that's not anything devastating. As a matter of fact, anytime you can find a trading strategy that is 70% correct, you're going to make tons of money. But there is a 30% aspect to this that people don't pay attention to. And that is just realizing that 30% of their trades aren't going to work. And so instead of hesitating or taking it personally, you just get prepared. Just tell yourself, oh, this trade did not work. Let's close out the trade immediately. That's that process of cutting losses short and letting your profits run with two elements involved. One, you want to cut your losses as fast as possible if you're in a bad trade so you can move that money pretty quick to another trade. So there's 4 stages, or there's 4 quadrants on how to get ready to trade or put on positions the next day. If we wake up and we think the market is going up and we see that it's opening higher, or the pre-market futures are trading higher, and the stock that we were looking at as one to enter if it confirmed, if that's both happening at the same time, meaning everything is going the way we expect it to, probably take 90 seconds, 2 minutes, 5 minutes to get into that trade. Step 2 is if the market opens higher but the stock that you were looking at opens lower, you don't get into it until it starts going positive, back up above the previous day's close. Because all that told you was that it opened lower in a bullish market. There was some profit taking from the previous day, and then the bulls stepped back in. If the market is opening lower and your stock is opening higher, you don't have to jump in right away. You watch it for a little bit. If it continues to move higher, even though the market's trading lower, then you decide, all right, they're still buying this even though they know the market's heading lower, so you can be buying it. On the other hand, if it opens higher and the market's heading lower and it's not going anywhere, that means it's not going anywhere because the market's heading lower. You don't have to jump in right away. And then the 4th quadrant is if the market opens lower and the stock that you're looking at is opening lower, you pretty much say, we don't want to be entering today. So what do we want to be looking for? If we see a bullish signal, we want to see that it's going to trade bullish after that. If we see it open and it immediately starts trading lower, what can we pretty much evaluate from that chart? that they aren't opened it, you'll see that immediately because the candle either is turning red or dark, whatever color you have on your chart. And so where is the logical entry point? If they bring it back down and then turn it around and come back up through the open, that's when you can be buying, because that told you there was some profit taking, and then it was confirming the signal. But if I was ready to buy this because of a strong Morningstar signal, and they gap it up, and they start trading it lower, I know to wait until you see the buyers come back in. In this case, they never did. If I bought it on positive trading that day, exactly what we expected after a kicker type signal, and then it closed back down below the T line, there's two places you could get out of this trade. If you're real nimble, if it opens higher and trades higher, as soon as it comes back down through the open, what is the logic that is built into the chart? Well, the buyers were there, but if they brought the price back down through the open where the bulls started buying, that means the bears are still in control. You can either stop it out there, or if they close below the T line, what's our T line rule? You basically want to be out, back out of that trade. That's why you buy 15 minutes before. HG, no. That's usually where I get ready to sell something 15 minutes before the market closes. Because we don't know, remember, I would rather be a day late but have the confirmation the next day that they're still buying than trying to anticipate that they're buying. Jim, you might have to help Mayron. Because if we were buying on this day into the close, we don't have any idea whether it's going to open down here or not. Okay, so entry strategies. When not to enter a trade. If we're ready to buy on positive trading because we've got a J-hook pattern, if it opens lower the next day, we're not buying. Not until it shows some strength. Just simple common sense. What should we be expecting after a bullish signal? Bullish confirmation. If it does open positive and immediately starts trading off, what's our strategy? We don't do anything until they turn it around and come back up through this open. Why? Because we got a buy signal here. Until we see the buyers confirming, and in this case, just because it opened positive and we see it immediately selling off, that's not telling us anything. That's just telling us they aren't buying yet. What we want to look for is when we see a buy signal, we want to see it open positive the next day after that. So with the market conditions the way they are right now, we saw there was a J-hook pattern in the NASDAQ a few days ago, and they still haven't been able to close it below the T line. So what is our general assessment about that? The simple T line rule. As long as they can't close below the T line, we're still in an uptrend. However, we also have to take into account that they opened higher this day and closed it lower, opened higher, closed it lower. What's that kind of indicating? This is where we're starting to run into bearish sentiment. So we have to be a little bit more cautious here. Open it. If they open it lower and start trading down, these signals are starting to kick in. You want to stay long, but you want to be a lot more, I'm going to say, attentive as far as if we wake up tomorrow and the pre-market futures are showing the market is heading lower again, or not again, but looks like it's heading lower after these selling days, That's pretty much telling you exactly what was happening up here. The sellers were starting to step in. However, here is the number one reason why we want to know what the candlestick signals and patterns are telling us. We want to see, or we want to anticipate what should be happening after a J-hook pattern. We could see pretty clearly that we had kind of a morning star signal, a little inverted hammer, and we were right on the T-line, and they took it back up. What are we seeing in the price action? J-hook pattern. J-hook pattern. What would be our entry strategy on this one? Actually, we recommended it a couple of days ago. Or I forget what day we did it. But what would happen? What do we want to see tomorrow? If we want to buy it, we want to see it open positive and start trading positive, telling us that that little resistance level is not acting as resistance anymore. Amazon had a nice J-hook pattern. So what is our expectation of a J-hook pattern? Wave 1, wave 2, wave 3 is usually going to be the same magnitude as wave 1. I think when they reported earnings, where is it trading now? 3,600 and something. So it was up 120 bucks. So that pattern was still working. And here's another example. There's our classic pattern, fry pan bottom. And this is where the visuals, okay, so it's only up 8 or 80 points now. All right. This is where the visuals help us. Now, where did we? What were we doing? It had to have been within the last few nights. Somebody was asking about the other moving averages. I guess just for the sake of, if there's new people in here, our moving averages on this chart is the 200-day simple and the 50-day simple, the blue line. And the reason they're on here is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. Candlesticks tell us exactly what their decisions are at those levels. The T-line is the 8 exponential moving average. Probably the most accurate trend indicator that you're going to come across, because it's got a very simple, not philosophy, but input, that the T-line acts like a natural support and resistance level of human nature. So when you combine the fact that candlestick signals are the graphic depiction of investor sentiment, and the T-line is a natural support and resistance level of human nature or investor sentiment, when you combine the two, you've got a very powerful trend indicator. Simple rule, you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. So show the efficiency or effectiveness of the T-line, I recommend people just put the T-line on your chart, the 8 exponential moving average. You'll be amazed at how many times they will come right back to the T-line and bounce back up. And because why that's such a relevant factor is nobody has the T-line on their charts. We've got it on there, which we utilize as that natural support and resistance level. For entries, are you only using the 3-month daily? Mike, it doesn't matter how, the span of this chart doesn't mean anything. You can make it as big or small as you want. I usually make it pretty big so that I can see with my poor eyesight what's going on right here. That's the most important factor. Now, if I want to see if there's resistance levels or any other thing, you could always make it smaller where you're going back further. But there's no formula, there's no rule of how big this chart cross is. I can make it bigger or smaller. I just want to see what's happening right here. This is what's telling us what's going on in investor sentiment right now. So in this case, you can see kind of the fry pan bottom and a J-hook pattern that bounced off the T-line. This little green line is the 3T line. It works in conjunction with the T-line. And simple logic says if they are above the T-line, they're in an uptrend. Below the 3T line, they're still in a very strong uptrend. So TBIO, we recommended it today. Did we recommend it today? Yes, we did. Recommend it today if it traded up above 23.12, and I can't see the numbers, because that would have told us, that it would have opened positive. Well, it did open positive. But it didn't go anywhere. But what are the things that we can add up? And this is what I call 2 plus 2. We see a J-hook pattern, a classic pattern, fry pan bottom, J-hook pattern that's supported right on the 50 and the T-line, started back up, and it's doing a doji today. What's our trading strategy? If it opens positive, what type of signal do we have forming? A doji sandwich. If it's a doji sandwich, what do we expect on a positive open? The doji rule says it's going to trade positive. And if it trades positive doing a doji sandwich, the magnitude of that next day will be the same as this right here. And what's that tell us about our pattern? It's breaking out. Are you using the I don't know what that is. The 1 year daily chart? Oh, it does. No, RW, I'm not using any time frame. If I want it, and we'll do it on when I go to a live chart. I just want to be able to see what's going on here. Is there anything else relevant? I can then make it smaller. So ask that question again when we go to the live chart. So here's the logic. If we know what a J-hook pattern should be doing, we can see that it's setting up correctly, bouncing off the T-line and the 50, that if it opens positive, we got a doji sandwich. That makes more confirmation that our J-hook pattern is in progress. So we don't have to wait for any confirmation at this point. If it opens positive, we've got an extremely high probability that it's going to trade positive going into the next wave of this J-hook pattern. It also tells us that we're in early on a good trade setup. If it opens positive and trades up and then comes back down through the doji, we stop ourselves out. What's that do for us? If it's going to work, we're in early, well before everybody else starts producing profits for us. If it doesn't work, we're out with a very small loss. PSM. Lou, you got me there. I don't even know what that means. What if it opens higher and starts to trade downwards, but you won't know if it will go back up through when you enter? What if it opens higher but starts to trade downwards? If this opened positive tomorrow, I'd watch it for 90 seconds, a couple minutes, and if it continues to trade higher, then it's doing what we expect it to do. If it opens higher, and in that first couple minutes, it immediately starts trading lower, we're not doing anything until maybe it bounces here and starts back up again. So remember, we're not, if it opens positive, when I say we could be buying immediately, I mean, within the first few minutes of seeing that it's moving in the right direction. Sometimes there's a long uptrend that shows a confirmed evening shooting star followed by a slow, persistent downtrend taking forever to reach and cross below the T-line. You always have to wait to cross the T-line before. No, Alan, I should have told you the other, or like, oh, I want to say the, darn, I can't think of the word. But the caveat to that is the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you're way up here and you see a sell signal, remember the number one criteria for candlestick analysis is the signals. Everything else is just a confirming indicator. So an additional confirmation is if you were way up away from the T-line and you saw a sell signal, you take your profits because more than likely it's coming back to test the T-line. You buy it after they test the 200. You buy it after they test the 200 moving average. I don't know what that means, Tim. The number one criteria is the signal itself. Then everything else is just a indicator that you want to watch to see what everybody else is doing at those levels. So stop should be at the doji day's close. If I was buying this one on positive trading and started trading positive, what is our expectation? It's going to go in this direction. Where should it not go? It shouldn't be going back in this direction. So if I bought here and it turned around and it went up a little bit and then turned around and came back down, now that would also be a function not by itself being the decision process, but let's say the market opened up positive, everything was trading positive, and then all of a sudden the market turned around and everything was selling off. So this was now coming back down. I'd probably close it out. What was my worst case scenario? Comes down, maybe hits the 3T line or even comes all the way down to the T line and comes back up. You can always buy it back if it comes back up through the open. Now remember, we're doing what ifs here. The whole premise of candlestick analysis is if this opens positive, the probabilities are pretty strong it's going to confirm and go positive. What's the strategy behind the 3T relative to the T line? It acts as a double confirmation that if you see a buy signal closing above the T line and the 3T line is coming up, just a little bit more confirmation. If you start moving too far away from the T line, then the 3T line becomes something that you watch, that if you see a sell signal and a close back below the 3T line, more than likely now it's coming back down to the T line. But that's a whole nother training session. No, it's not a whole another training session. It's just pretty quick about what I just said. What if you buy and it starts going lower? Where do you get out of at that point? Hopefully we described it. But if this opened positive, started trading positive, and the market turned, you can always get back out when it comes back down through the doji. Worst case scenario, comes down, wobbles around, and never comes back up again at the end of the day. You close it out at the end of the day because it's doing kind of a bearish engulfing signal. Where is our stop loss if open positive and coming below the doji after some time in the same day? Again, see what the market's doing. If all of a sudden the market turned and everything's selling off, as soon as it came down through the doji itself, that might be the time you come back out of the trade. Does it matter that the trend has moved up significantly above the lows fry pan bottom level, isn't the risk higher for buying the pattern? That's exactly why you want to recognize patterns. There's your fry pan bottom. There's your wave one. There's your J hook. That's called your classic pattern, which is, what do you expect coming out of a fry pan bottom? A strong price move. What's the prerequisite for a J hook pattern? A strong price move, a pullback, and then your next strong price move. And I don't know why I don't have the, did I copy all these without the, apparently I did, without the stochastics. You want to buy the signals when your stochastics are in the oversold area. You're usually buying a pattern when the stochastics are already up in the overbought area. Curtis, you'll have to bring Clove up when we go to live charts. Just see it hits your stop loss. So in this case, you have whatever, you entered, but at the end of the day, you would have the position at a small loss. Yeah, if we had bought this one today, at the end of the day, it did a doji, so you might be down a little bit. But remember, not every trade you're going to put on is going to be you buy it and immediately does exactly what you want to do. You're buying that position because of a pattern. And the patterns are the results of hundreds of years of the Japanese rice traders identifying what human nature does time after time. So just because you entered and it didn't do exactly what you wanted it to do, you were buying the pattern. You still expect more upside. When the price turns down, do you wait until last 15 minutes to exit, or or right at the time when the price is falling? But we don't know if the price will go up at closing. How do you determine when? If I bought this today and at the end of the day it was still trading down here, it out then. If it was down here during the day, what was our expectation of this price move? Going in this direction. So it's already here, and it's probably not going to move too much more if it's selling off. Just wait till the end of the day. If it closes down here, you close it out. But we're doing the what ifs. What we're missing out on is the probabilities are that we're heading in this direction. So you want to give the pattern time to work out. And as we saw today, it traded up, backed off because the market was soggy good part of the day, and then came back up again. So I would have waited to the end of the day. At the end of the day, it did a doji. Now I've got a very simple trading strategy if I'm long. Probably put a sell stop at today's low because logic says we should be going in this direction. If it came back down through here, that's not what we're looking for. That now turns into a bad trade. So if the market opens up and starts selling off early, like today, perhaps wait a little longer, yes, than usual to ensure that the stock you're watching is going up. Wait for the 15-minute chart indicates versus a 3 or 5 minutes, or a 10-minute. You can either use a 10 or 15-minute. Exactly right, Marshall. Do you use the 10-minute to get out in the day trade or lower? It depends on what if you are day trading, yeah, you pick out the time frames that you want to be trading. I'm usually trading soybeans, cattle, the dollar, things like that during the day. And I trade them off the 10-minute chart. And we'll pull up live charts just to show what happens. So why not just wait 15 minutes before the market close? I don't understand what that means. Yeah, so we're getting near the end of the day, and there's 15 minutes left, and the market's trading down, and this is trading there. Yeah, I'm going to close out the position. When you enter a trade, you always put a stop loss or just let the trade run its course. Nah, you should put a stop loss. Every time you put on a trade, if I'm buying this position because I expect it to go higher, I've already got a mental note of where I should have a stop loss, like at today's low. Now, I don't think it's going to move in that direction, but it doesn't matter what I think. You put a safety stop in there because if it doesn't do what you expect it to do, yeah, I don't know. I forgot why I must have been, none of them right now have the stochastics on it. We'll go to live charts and you'll see the stochastics. That too. If the markets are mixed, like today, the Dow was trading lower. You know, they weren't going anywhere. So you don't have to rush into anything. The market's telling you it doesn't know which way it wants to go. So unless you saw a signal that was really confirming, there was no necessity to jump in anything real quick. Yes, so that's part of your analysis. What's the market doing? Now, if we wake up, we woke up this morning and the pre-market futures were showing that the Dow is going to open up strong like it did. So we get ready to watch everything. But most of the stocks that opened up today opened up and immediately started trading lower. What symbol do you use? I think it's DXAM off the Thinkorswim platform. Dollar June expiration. Do you wait until the end of the day, day of trading, to make your decision unless suggested happening? Yeah, if it gets near the end of the day and it looks like the market's not coming up and this is trading down here, got to ask myself, all right, is this the best place to have my money? All right, let me go through. Let's do this. Let me get through the, how many do I have? 4 more. This is, yeah, then we'll go to live charts and we can see it a lot better with the stochastics on. So here's one that told us where to enter because we could see the scoop pattern. Now, if you didn't get into this one, and we keep saying, watch this, because what can we expect happening? Well, we could see the J-hook pattern starting to set up. What do we expect from a J-hook pattern? This type of price move. So if you were buying this one tomorrow, so if you miss this move right here, at least now you can see what the next move could be, the same magnitude as this move, which would take you up from about 11, wherever it closed today, 11.20, 11.40, take you up into about the $23 range. So you don't have to hit the first move. You can gauge what the second move will be based on the magnitude of the first move. But at least you can see what's setting up. You can see the J-hook pattern. That would tell us if they start trading this positive tomorrow, we will be buying because we now know that we're probably in wave 3. So because we know what to expect out of a scoop pattern, that allows us to make decisions. For example, this one, when it gapped up and then started trading lower, that was not great. So where would be an entry strategy that would tell us that we're in a scoop pattern and we're confirming the buying? Well, they opened it higher. As soon as they came back up through the open, what was that telling us? That the bulls were back in control. And where were they in control? Coming out through the handle of this scoop pattern. And what do we expect from the scoop pattern? this type of price move. To close a trade or not, because it could whipsaw during the day, remember the most important factors of a candlestick signal. Where does it open and where does it close? What it does during the day is just noise. So the first thing that you want to know or learn in candlesticks is the signals, because that's your bread and butter. And right behind that is the patterns, what to expect. And the reason we want to know what to expect, or why we learn what to expect, is because the Japanese rice traders have had 400 years of using the graphics to show what was happening in human nature. So today, look what was happening in BJRI. There was your inverted hammer, morning star signal. And see where it occurred. This is why the visuals of the charts help you out tremendously versus any other type of technique. Because look where this morning star inverted hammer pattern was setting up. Right at the same level it bottomed out before. So what would we have if it started trading, confirming our morning star signal? We'd pretty much have a scoop pattern that bottomed out at the same level it bottomed before, double bottom. And now what do we expect on this one? More upside. With a short kicker, yes. So we'd recommended shorting this, but then when we saw the inverted hammer, what did we know about the inverted hammer? If it trades positive after an inverted hammer, you've got a 95% probability or greater that it's going to move positive. So as soon as we saw this, especially if you were short and it came back up through this level, who's in control? The bulls are back in control. Yeah, so it started off as a short trade, but then it failed, but then it turned around and turned into a strong buy. Okay. BTS was recommended on Monday. So is that still a good buy today? Sergio, we still have to wait till we go to live charts. All right, so here's another strong pattern. The Mcmuffin, a morning star signal. Now here is where your entry strategies are extremely helpful. Next day it did a doji, didn't really confirmed. What's our doji rule? It's going to move in the direction how they open after a doji. And if it opens positive after a doji, after this type of setup, first of all, you got a morning star signal. What's that infer from Japanese candlestick analysis? You're going to be, that's a reversal. Then you have a doji followed by a positive open. What's our doji rule? It's going to trade positive. What's the likely magnitude of this candle? The same magnitude as this candle. What's that tell us about all our indicators? Pretty much tells us it's confirming the morning star signal. It's telling us the T-line's not acting as resistance. It's telling us the 200's not acting as resistance, and that this downtrend has been broken. If you're a day trader, this is perfect setups for high probability up moves. You can already measure the move, and you know where to be out of this trade. It shouldn't trade back below this level. That would tell you they're having a hard time getting through the T-line. But what do we expect after a Mcmuffin? Remember, a Mcmuffin is a morning star signal followed by a doji sandwich, or your morning sandwich, the Mcmuffin. Strong price move. And that's the same thing we saw today in LBTYK. There's your big morning star signal. There's your doji sandwich. There's your breakout through the resistance level. Expectation is if this opened lower and I was ready to buy, didn't pay attention, nah. Then it came back up through the open. So as soon as it comes up through the open, what does the logic tell us? The bulls are back in control. Where's an excellent place to enter this trade? If it comes up through the previous day's close, what do you got going on? A green candle, and what's it telling you? The bulls are confirming this trade. Okay, trader investors should make their own rules that call as a trader plan this past Saturday basics. Oh, okay. Thank you, Jim. Okay. So now let's go to live charts. If I can do this elegantly. All right, so there's our market. What's the first thing we kind of anticipate? Well, they haven't been able to close this back below the T-line, or they took it back up above the T-line. Almost, and then notice how they took it down, took it down, took it down, but what was the one thing the bears couldn't do? They couldn't close it below the last candle. This is kind of a methods rising, one of the other ones of the 50 candlestick signals and patterns. If they open this positive, what's it telling us? This signal is confirming breaking this level. What can we expect? Probably more upside, maybe coming back into that trend channel. So it just gives us better prospects that if we see bullish futures in the morning, we're going to be more apt to be going after the long positions again. So here's the J-hook pattern that formed in the NASDAQ. And what was our simple rule? As long as it didn't close below the T-line. It was a little bit dicey today. Had it closed here, that would have given you a completely different story about what was going on in investor sentiment. The fact that they brought it back up above the T-line, just a very simple statistic. The uptrend is still in progress. Better probabilities that you're still in an uptrend. What was I going to look at? Oh, I think I can get it. And notice what the low of the S&P 500 was today. Right smack dab on the T-line. The reason I point this out is nobody has the T-line on their charts. This constantly acts as a natural support and resistance level of human nature. So real quickly, I'm going to go to, whoops. Let me see if I can find something that moved around quite a bit today. Let's see. I want to see something with a little bit more. You can see this one. This is wheat. You can see what the daily chart is trying to do. It's trying to set up a J-hook pattern. Now, if I'm trading intraday, I go to my 10-minute chart. And that 10-minute chart told me, let's move the stochastics up. Let's move it. There we go. Stochastics in the oversold area, left-right combo, close above the T-line on the 10-minute chart. I'm trading this until what's our other parameters? And look how far away we kind of moved away from the 10-minute T-line. I've got a safety stop right here. That if they're going this way, yahoo. If they come back through this direction, I want to take profits. So if I'm getting ready to buy right in here, then I can flip to my 5-minute chart. And my 5-minute chart is also forming a good signals. That kind of confirms that kind of confirms that my 10-minute chart is going to be working. If I'm reading. So if you were trading the Dow futures off the 10-minute chart, it works just the same way. There's our bullish Harami. Close above the T-line, little mini scoop. Stay long, stay long, stay long. Might have closed out here, but it still didn't close below the T line, closed out here. Now, look what this was telling you. They'd hit a level where some of the sellers are stepping in, and it looks like that's where the sellers are stepping in. That's where you would have closed out your 10-minute chart. If you wanted to be a little bit more nimble, you flipped your 5-minute chart, and you had a shooting star, still didn't close below the T line until over here. So you use the 5-minute and 10-minute just as effectively. If you're trading faster, maybe use a 1-minute and 5-minute chart. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute combination. If you don't want to trade that fast, maybe you go out to a 30-minute chart or a 15-minute chart. Takes a little bit of more of the oscillation out. So the reason, oops, didn't go back. Maybe I can use this. Yeah, you can see what happened. They took this down. This is a day 10-minute chart. Oops, 15-minute chart. Let's go back to the 10-minute chart. Look what happened to your 10-minute chart. A hammer right down to the 200-day moving average. Started back up after that. So if I was day trading this one, may have bought in here and closed it back out. Bought back again here. Got a little bit dicey in here. May have closed it out. So the nice thing about candlesticks signals is you close it out, you can always buy back of investor sentiment. So this isn't rocket science. This is just a graphic of what's going on in human nature. So this is why we've been following this chart. Because of the scoop pattern, we have expectations of a strong price move. So if you do what the charts tell you, for example, way back, a while back, people in the chat room were in OXNE. Look at the scoop pattern. Whoops. Hold on. What did I just say that Alexa answered me? How long did you stay in this one? And this is what keeps you from taking profits just because you have profits. Terry, if the sound fluctuates, you might go up to the red circle, up to the top right-hand part of your screen, click it, you'll log out and then log back in, might get a better connection. For day trading, do you want all the time frames to synchronize before you place the trade? Well, Pat, you kind of do that by itself. And again, I use the bellwether chart, that if the 10-minute chart looks like it's setting up, then I'll flip down to the 5-minute chart. And if the 5-minute chart looks like it's still confirming, that means the 10-minute chart is going to keep improving. Then if I want to get real specific, I'll flip down to the 1-minute chart to make sure the 1-minute chart is still moving in the right direction. If the 1-minute chart is peaking out and pulling back a little bit, I'll wait to see when that pullback is over on the 1-minute chart. When it does something like a J-hook pattern, then I know the 5-minute chart will continue. What's a minimum size position for day trading, 5 or 10 minutes? Because if you get in and out 3 times a day, your profits have to overcompensate for your commissions. Mike, usually the commissions are either now no commissions anymore, or they're very small. So commissions should be a function of how much money you want to be trading. So if you're trading $5,000 positions and you're paying $3.95 to enter the trade, it's not going to mean anything. If you're only got a few $100s into the trade, and then you might want to trade slower. So anyways, so here's that same process. When do you close out this trade? Remember what the Japanese rice traders tell us. Where do most people buy? They buy exuberantly at the top. How do we recognize exuberance? First of all, the size of the candles, number one. And number two, look how far away you are from the T-line. The further away you are from the T-line, especially in the overbought condition, the higher the probability it's going to come back and test it. So if it closed up here, by this time, knowing that it moved that far away from the T-line, there's two strategies. One, you flip to your 10-minute chart. And as soon as the 10-minute chart starts showing selling that's bringing you back below the 10-minute T-line, you can take profits. Why would you use the 10-minute chart? Because you've already got the alert on the daily chart that you're way too far away from the T-line. Get ready to start selling. So you might have closed out the position right in here because that's where the selling started. Or if it opened lower the next day, you immediately put your stop at where it opened. Because logic says if you're in the overbought area that far away from the T-line, if they could bring it back down through the previous day's open, the sellers are in control. So you wait to enter if 30-minute chart is going higher, but the 10-minute chart going lower. Wait till they are in sync. No, yeah, depends on what combination you're using, Calvin. Because your 30-minute chart won't start showing a sell signal until maybe after two candles. So if you've gotten too far away from the T-line on your 30-minute chart, then you want to flip to your 10-minute chart to see if the selling is going to be starting. Most charts are fractal in how they display what's on the chart. Yes. This chart could be a 10-minute chart. This chart could be a daily chart. What's the difference between a scoop and a J-hook pattern? JL, what is the difference between a scoop and a J-hook pattern? What was our prerequisite for a scoop pattern? A flat handle. What's the prerequisite for a J-hook pattern? A strong up move, and then the J-hook. Okay, so I'm going to still kind of mix entry into some of these charts that we're going to be looking at. Oh, somebody asked a question I said we'd answer when we got to the J-hook wave 1 and wave 2. Wave 3 is going to be equal to wave 1. A scoop pattern is going to have a big slingshot effect. Bob, that is one question or one, I'm sure through the years, like I have, you've received thousands of emails saying, we're going to teach you the new secrets of profitable trading. Unfortunately, with candlesticks, we can't say that because there aren't any secrets. These charts are all available to everybody. The signals are the same. The patterns are the same. So there's no secrets in candlestick analysis. All we have to do is learn how to use them effectively. That's the secret to successful trading, is knowing that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And the graphics of candlesticks are just the graphic depiction of what's going on in investor sentiment. I only use a day, hour, 10-minute, when I was taught you should find what works for you and not change the time frame. Yes. Use the time frames, combinations that work for you. Don't change the time frame to try to find something that's hopefully confirming staying in or not getting into a trade. Oh, it was VTSI. Yeah, let's see. When did we recommend? Got to go back and. Oh, it was Monday. Because there was your doji sandwich. Now what's your strategy? Well, you can see you had a fry pan bottom. What's the T-line rule for a fry pan bottom? You just stay long as it doesn't close below the T-line. Whoops, what have I done? Whoops, now I've lost. Okay. On the 10-minute after market chart, we don't use the aftermarket charts. All right, I don't think I can even get the aftermarket charts. But the reason the aftermarket doesn't mean a whole lot is you could have, I forget how many shares traded in OCGN, 10 million shares today, but after hours you might have 22,000 shares traded. That's not the graphics of everybody buying and selling. That's just people trading after hours. Ernie, depending on how long you're planning to hold a position. If you're trying to buy something that might be a longer term hold, for example, you might take a look at the weekly and the monthly. And I very rarely use those because I'm a swing trader. Most of my trades are going to last anywhere from 2 to 10 trading days. So a weekly chart doesn't really mean all that much. Would you agree to trade only 1 or 2 stocks with big size instead of trading 10 stocks with small size? Bob, that's up to each individual. I trade 10 positions, and each position is equal dollar amount. That way they're all 1 unit of my portfolio, not one is favor over something else. Yes. Okay, now, whoops, I'm getting sidetracked here. So this is where you use the logic of the visuals of candlesticks. Where do you think everybody was buying this stock? Smack dab off the 50. A lot of people say, well, why don't you use the exponential 50 and the exponential 200? We're not using them to make our decisions. We're using them to see what everybody else's decisions were. So on TKAT, you had an inverted hammer, bullish confirmation, a Morningstar signal, stochastics coming up, and they did it right off the 50. Where could you be buying? Well, if you were buying on this day, what was your next expectation? You wanted to see what it did at the T-line. You wanted to see it get through the T-line. If you didn't buy on this day, what did you want to see? You wanted to see bullish confirmation telling you the T-line was not acting as resistance. Mavis, just jump. This is why when you're that far away from the T-line, pick a spot where it shouldn't trade, like halfway back down through that candle. Why wouldn't you want to see it trade back below that halfway point? Because look how far away you are from the T-line. Mike, I would argue with that. Well, shuzzbutts. Even it. That was a very easy one to trade. All you have to do is stay long as it stays above the T-line. If you use the simple T-line rule, that'll take all that fear or that anxiety out of your trading strategies. You just hang on. If I was buying this in here, my next criteria, stochastic is still coming up, so we're not in the overbought area. You just stay long until you see a sell signal and a close below the T-line. Ocular was my next one on the list. Oh, I can't even type 4 letters in a row correctly. This is where you use what we call the RARE system. Research analysis, reverse engineering. Something moved that big today. So you go back and find out what it was. If it's something that's going to greatly, if it was an upgrade, probably not going to be not going to be so relevant. But if it was something that they were approved of from the FDA or something like that, that becomes much more relevant. We did the same thing back here on eyes. When it was trading up here at 290, we started buying because what type of signal did it have? It had a kicker signal. So we go back and say, why is it creating a kicker signal? Well, the FDA had approved their stuff for helping the blind people, something that could help them see again. Was that relevant? Was that relevant? We ran from 290 and we got up here in the $17 area. So it's not that we are any great stock pickers. That was a message. That told us there was a change of investor sentiment. And that was the same thing that happened on OCGN. It's good right in here, but we first started buying it at 73 cents. Not because we knew anything. It's because I was demonstrating to my brother. He says, well, how do you find ones that are going to move real big? And I say, you go and scan to see which ones have got news or a breakout. And we just happened to be, I did a scan real quick, and I said, well, this stock, I don't know what it does, but they've been trading at 15 cents, and now they're trading at 73. So he bought it at 73 cents and sold that one out at around 11, got out in this range. But right now, no, that's not right. The news on this was that they were approved for their vaccine in India, which meant they could get approved over here. Oh, ocular, all right. So that is, Marshall, that is relevant information to say that's probably going to continue to affect their price. So the best friend signal, is it too late to buy? You watch your 10-minute chart or you see if this opens positive tomorrow. Bob, yes, that's pretty much the case. But there's, back to remedial typing class, it's the only reason I took it is because there was a bunch of girls in my high school class taking it, so I figured that'd be a good way to socialize. Yeah, so you buy when you see a candlestick buy signal or close above the T-line. You sell when you see a candlestick sell signal and a close back below the T-line. Okay, so another one. JCS, fry pan bottom breakout. This, I'd go back and see what the reverse engineering, what caused that to do that. First of all, you've got a pattern, the fry pan bottom, then the breakout. Just simple logic says, let's see why it broke out. ENLV, same scenario. Observe the obvious. Buy signals, right smack dab on the 200. Now they're gapping it up. Let's find out why they're gapping it up to see whether this is a very high probability, low risk place to trade or to be buying. As we can see on this one, this was a very high probability place to buy because we could see visually everybody was buying as soon as it supported at the 50. ADS. This is not an unusual syndrome. Came up, drifted all the way back, and then look at our little morning star type signal right here on the 50 and the T line. And then they gap it up. Where do you think the next likely target is going to be? Probably coming right back up into the trend. DLPN. Pulled back. Right smack dab on the 50, starting back up. It can still probably be a bought. Look at your little J-hook pattern setting up on positive trading tomorrow. And RGS drifted. Now you have a best friend gap up, breaking this downtrend and bouncing off the 50. This becomes an extremely high probability trade setup based upon a strong candlestick signal breaking out through that area or off that T line or the 50-day support. Kind of your bullish harami right on the 50. Doji sandwich. Very easy trade. You could be buying this one on positive trading, and this is where you use the halfway point. If this is the candle that told you the bulls were in control, the Japanese rice traders have a very simple philosophy. If you're buying, where do you not want to see it close? Back below the halfway point of the candle that told you the bulls were in control. What was that? NTT VXRT. Big breakout. Continues higher. What was the news on this one? The news on this one was this company's developed the vaccine, but you can take it orally. So there's a lot of people that don't want to take a vaccine shot. So this becomes another alternative. And supposedly the president of the company is going to be presenting this to Congress in the next few days. That means there's going to be a lot of interest in this stock. So you could still be buying this one, especially if it comes back up through today's open. So this is where rare process, research analysis, reverse engineering allows us to find out what's happening in a company that we may never have heard of before. Big bullish engulfing signal, double bottom, gap up, HYFM, gapped up through the 50. Now here at this breakout level with a gap up, that's usually telling you there's going to be more follow through. Bloom, fry pan bottom. What do we look for on a fry pan bottom? A breakout. What type of breakout did we have? Your best friend signal. Your best friend signal is going to decide what do you expect coming out of a fry pan bottom breakout, a strong move to the upside. Oops, I didn't scroll fast enough. Oh, I didn't scroll at all. Let's see, company news on JCS. Okay. When you check the 10-minute chart, is it enough that the price is hugging the T-line, and does it have to be moving up away from the T-line? Or can you base your determination on the 50-day moving average? If I'm looking at a stock on a breakout situation, let's just see what this looks like on the 10-minute chart, and they're still trading above, it doesn't matter on the 10-minute chart, because the 10-minute chart tells me they're still buying it, that they're not selling it off anymore. So this one looked like it had a big break, profit taking, and then there's your little bullish harami. Started up, and what was it telling you during the rest of the day? They weren't selling it off. Bob, that's exactly right. Because I was the worst investor in the world, I was even a stockbroker for 8 years. I got out of the business because I realized that brokerage firms had no more idea about what made prices go up or down than anybody else. And when candlesticks came along, the first thing that smacked me in the side of the head was that this makes sense. And I forgot what I was saying. Oh, so everything I put into my trading as far as using candlesticks was to keep my emotions out of my trading. So everything I do, because it's all based upon common sense, I just use common sense to keep from making an emotional decision. Let the chart tell me what it's doing. Chris, the difference between a best friend is it's a doji gap up, whereas a kicker signal is a big dark candle, and then they gap it up above the previous day's open and go the opposite direction with another big candle. I don't know whether I found any that illustrate. Whoops. How can that not be? This is terrible handwriting. Plain to the person that writes the notes. CGA, look at your fry pan bottom breakout. Look where it was time to start taking profits. Look how far away you are from the T-line. What happened when they pulled back to the T-line? There's your bullish engulfing. What type of pattern is setting up? Your J-hook pattern. All right, thank you, Marshall. Okay. So what is a very simple entry strategy when you see something like this, where, let me make this bigger. If you see something where they've done a doji after a bullish reversal and they open up positive, you've got a good probability that doji sandwich is going to be working. Vet, you can see that there's a doji sandwich right here on the T-line. If it opened positive, you could be buying. Now it's done another doji. If it trades positive tomorrow, you want to be buying on that doji sandwich. The doji sandwich is one of your best entry strategies. Look at your scoop type pattern and a doji. If this opens positive tomorrow, what's it telling you? This would be kind of be more like a bullish flutter kicker signal, but it would tell you to be moving positive, breaking out through the handle. Your scoop pattern would be in progress. Oh, I've kept us way over time again. There's a doji sandwich. Anytime I see a doji sitting right smack dab on the T-line, if it opens positive, buying right away because we know the magnitude of the next move. Mogo, there was your doji sandwich after a buy signal. Morning star signal, came back up. If it opened positive, what would you have? A doji sandwich telling you the T-line is not acting as resistance anymore. AYRO, big move up, doji. Opened positive, what did it tell you? Confirming the doji sandwich, telling you the T-line's not acting as resistance and telling you this downtrend's not in effect anymore. Oh, San, have you seen what a doji sandwich is? A big day, a doji, and then a doji rule opens positive, so your little doji sandwiched in between. That's your best friend signal, yes. Anytime you see that doji gap up, take a look. Do you run scans for dojis at 50 SMA? No. If I'm running a doji scan, you can go through them so quickly that you can see which ones are trading up off the 50 or through the T-line. So on any given day, if I ran a doji, especially a doji in the oversold area, and then sorted it by the biggest percent price move the next day, that's going to give me best friend signals or left-right combos. Can you please explain how you do scan for those candle forms? The formulas are in the little folder down to the very right-hand bottom part of the screen. There'll be the formulas for any of the signals. Now, I do a simple scan. My scans are, I'm looking for stocks that had the biggest percent price move today. And usually within the first, I can go through the first 50 charts in a matter of a minute and a half. And out of those first 50, I'm probably going to find 5, 7, 10 good chart patterns. Then I go back and see which ones of those are the best. I can sort through or find the best charts, and we try to teach everybody this. You find the best charts that once you become familiar with candlestick signals, you can go through the simple scan, and in a matter of, if you don't know what you're doing, in less than 20 minutes, you're going to find the best trades. Once you know what you're doing, it's going to take 10 minutes to find the best trades, and it's just a simple scanning process. I use either TC2000 or Metastock. Both of them are very good scanning softwares and not that expensive. Kicker signal, somebody was asking about. This is a kicker signal. They open here and close here, dark candle. This is recorded. It's always recorded, Doug. Then they gap it up the next day and trade positive. The investor sentiment has kicked in the opposite direction. How long do you hold this until you see a sell signal and a close below the T-line? Except what are we seeing right now on this one? There's your J-hook pattern setting up. Where could be your next likely target? By coming back up to this level. Now ERRI, there's your kicker signal. That's because somebody recommended this stock. That has a different value of the signal. Now it's still going to be a signal, but it probably won't last as long because all it is a change of supply and demand of stock, not a change of investor sentiment. And then you've got what we call a trend kicker signal. Trend kicker signal is they bring it up, they close it lower. The next day, they gap it up and take it the opposite direction. This is already in the trend. It wasn't the reversal at the bottom, but it was a trend kicker signal during the uptrend. This is why when we go through all our chart patterns, look at your little double doji. There was a morning star signal, a double doji sandwich, so kind of your Mcmuffin, and it hit our first target today, the 50. So you're getting up toward the overbought area. As soon as it hits this level and they've stretched to get there, what's the logical thing to do? You go to your 10-minute chart. Your 10-minute chart says, "Up, they're buying exuberantly. Maybe we'll take some profits here because it's showing they're starting to take profits." And where were they doing it? Whoops. Right at the 50-day moving average. So entering a trade based upon candlestick signals is telling you that there is a change of investor sentiment, or if this was kind of a double bottom, fry pan bottom, and we bought on this day, breaking out through the 50, breaking out through the fry pan, where should it not trade? Well, if this candle told us the bulls were in control, as soon as it came back down through the open, who's in control? The bears are in control. And just simple logic says, do we want to be long a position where the bears are in control? No, you close it right. I think you called a J-hook pattern on OCGN based on the daily high tail rather than the high close. You always use the tail like this instead of the close. No, Alan, I wasn't using the I was using the fact that it was doing this. Oh, as far as this being the J-hook, no. I'm considering this the J-hook. This just happened to be a spike up that day. But this is telling you investor sentiment pulled back. In this case, they pulled back to the 3T line and now starting back up. So where would you, a lot of people say, well, I don't want to be chasing a stock. You don't chase a stock. You wait to see what patterns are setting up. And in this case, looks like the consolidation's over and they're starting the next wave to the upside. I don't know why I had this one on here. It was to illustrate something. No, I think it was more just a simple bullish engulfing signal followed by a gap up. This is where I would have been buying. And how long do you hold on to this one? So you see a sell signal and or a sell signal and a close below the T line. All right, so every time I put on a trade, I know that the probabilities are in my favor because of the pattern or the signal that I'm going to be in the right direction. It might be a 0.3% move. It might be a 300% move. I won't know that until I start evaluating what's happening in the trend. So, and we also have the prospect of finding things that are going to produce huge profits. Not because we're any great stock pickers. All we're doing is identifying when there's a change of investor sentiment and things are starting to go our way. So right now, we've been watching this to see if it would hold up, but it hasn't. So it's kind of off the list right now. All right, so that's about all I got. Are there any general questions on candlesticks? Oh, somebody was asking, our private training session for May 15th is full. I don't know when we'll be doing the next one. All right. How to copy the chat? That I don't know. You have to ask somebody in here. All right, thank you, Mike. All right, so I guess with that, Jim, go ahead and do the double line. And in 3.7 seconds, do the next double line. All right, we'll try to go through this fast since I kept this way over time. Oops, now I got to find where the first double line was. Oops, still scrolling. Let's see. Henry, did we get the answer your question on the best friend? Still way down here. Okay. UMMC. That one's not coming up. Did I type it wrong? Blue. Fry pan bottom-ish. Another one. Notice, and there's another confirming factor. Notice where they came back to today. They came right back to the 50 and the T-line. When they do that and bounce back up, that's a pretty good indication they're not selling it off. There's probably still buyers. This one's a dead one. When they gap it up and close it right back into the trading range, that's kind of a failure. So if this opened lower tomorrow, I'd close out the position, find something better. Apache, another one you could buy if it opens positive tomorrow. That's where you want to see what crude oil prices are doing in the morning. That's not crude oil, that's live cattle. Like live cattle, you put that in your gas tank. So it looks like crude oil is at 64.60 or 64.80. Still moving up. ECPG, fry pan developing. Yeah, nothing there great yet. Definitely want to see something that tells you the EG. That's a J-hook pattern. That one you have two entry points. Either buy it on positive trading and then watch to see what it does here, or wait for it to break up through that level. EXTR. That's a nice kind of fry pan bottom breakout, but look how far away you are moving from the T-line. Have a safety stop at the halfway point. Bob, I would say that's already, that's already kind of, the horse is already out of the barn on that one. Hershey, nothing exciting. Again, an institutional type trader, but if you like it, you can stay long because it's staying up above the T-line. ZNTL, that's a J-hook type pattern setting up. If it starts trading positive, you can be buying it or be more conservative and wait for it to break through that level. Intel, usually not a very exciting one to trade, but right now, if you are short, you can see you've got kind of a doji bullish confirmation. If you were short and it opened positive, I'd cover the short, but I wouldn't be a buyer until it gets up through the T-line. This one came out of a fry pan bottom, ALB. Now doing kind of a J-hook pattern. Almost touched the T-line today. Whoops. No, it's the opposite of a J-hook. They traded lower today. So if I was long, you'd still use the T-line as your stop. Yeah, so that one, if this opened lower tomorrow, I'd close that one out and find something better. Fubo, another one that was trying to break out. The fact that it closed below the T-line today, I would have closed it out and found someplace better. Crisp. Now, when I say find someplace better, remember, there's 9,500 trading entities out there. On any given day, you're going to find 5, 10, 15, 20 excellent buys. So if you've got something that looks doubtful in the overbought area, close it and move on to a better probability. Crisp, same thing. You're in the overbought area. It's having a problem getting through this level. If this one opens lower tomorrow, I'd close it out. It definitely needs to open higher and get up through this level quickly. Edit, same scenario. This is observe the obvious. Which direction is this stock going? Downtrend. And what happens when it gets to the top of the trend? Bearish left-right combo. I'd be more apt to go short with the anticipation it's coming to the bottom of this trend channel. PLRY, if you've stayed long, you can stay long. Just don't let it close back below the T-line. It wouldn't be top of my list for a buy. It's a very slow uptrend, but you can stay long. And Quantum just climbed barely back up to the T-line, so it has to open positive to trade positive. This one's coming off of Mcmuffin. There's your Morningstar signal followed by a doji sandwich. So that's why you give it a little bit more benefit of the doubt as long as it stays above the T-line. Pixie. That one you would see what caused that move. See what the news was. But you could be buying this one on a fry pan bottom breakout when it starts trading higher. SGBX, that's having a little bit of trouble getting through the 200 if you're long. Or if you want to go long, I wouldn't buy it until it comes back up through today's open. METX, that's kind of a failure. It's not, let's see. Usually an inverted hammer is going to happen at the bottom. This was a failure, so you have to watch now to see how they trade this. Philippe, I probably wouldn't be playing around with this one unless it starts really moving strong again tomorrow. Overstock, that's a failure. Look how it came right up to the resistance level, but it opened up positive and came down here. If this opens lower, you're still in this trading range. I'd be someplace else. And Target, that looks like a little J-hook type pattern. You could buy this one. Let's see if we can make this big enough where we can see it. You could buy this J-hook pattern, little best friend gap up. Just watch to see what it does here. If it breaks there, then you look. This one was a perfect example. Freeport. We were going to buy this one on positive open, but you can see exactly what happened. As soon as it opened, it started trading lower. Kept us out of that trade. If you've held on to it, yes, I would. If you're long, you can stay long, but I'd have a safety stop just below today's low because if it still comes down through there, they're coming back to the bottom of the channel. Another failure. Opened positive and came right back down. That's not good for the bulls. JG, that one you should have stopped out. When they're coming back down through the previous day's low or open, close it out. Now, if you didn't close it out, it has to open positive and trade enormously positive tomorrow to stay in it. UPS, just stay long. FedEx, kind of your bullish double doji flutter kicker signal, a dark candle. They gap it up, doji, bullish confirmation. I would expect your target is going to be the top of the channel. Let's see, would you still buy the effect of UPS? Take our signal 2 days ago, earnings, or does FedEx? FedEx looks better to me. UPS, oops, I shouldn't say that. I was thinking that was a dark candle today. I would probably go with FedEx just because of the magnitude of this move already. This one you want to be short, or you definitely don't want to be out. Here's a very simple rule. If you see a doji come down in support, it should be going in this direction. When they opened it lower, your safety stop should have been at the low of the doji because that would have told you they were coming back down through the T line. You would have closed out the position at that point. There's another best friend breakout. Expect at least a 45 degree. NTP, that was the doji sandwich. You could buy this one on positive trading. And Owens, Illinois, not a very exciting stock, but it's got a good chart. There's your fry pan bottom or your wedge breakout. You just stay long as it stays up above the T line, let alone even the 3T line. Posh, nothing exciting on that one, GS. Which means I would be someplace else. EFII. EFII. That's a nice fry pan bottom. You just stay long. Doji up here. Anticipate going in this direction, so have your safety stop just below today's low. Rada, darn, I'm hitting so many. That one with a series of dojis, kind of a cradle pattern. There's your headboard, there's your bed, there's your footboard. Wouldn't be afraid to be buying that one. That's a good cradle pattern setup. And why is that so effective? Because you've had 2 weeks of indecisive trading, dojis. Now they've told you what their decision is, which means that next trend will usually be fairly hefty. Nike, you just stay long. It's not anything greatly exciting. You're in a downtrend. You don't have any strong reversal signal. I would be someplace, for a short, am I looking at the same? No, Calvin, I wouldn't be short this one. I wouldn't be long, but I wouldn't be short. Gulp, you can stay long on this. Make sure your volume is good. It looks like type it might not have a whole lot of volume. And there's another breakout. You just stay long as this stays above the T line. Goog, you just stay long as that stays up above the T line, even the 3T line. Tesla, you could short this one. Notice your bearish best friend, the doji gap down, dumpling top. Would be back down here, which would coincide with coming down to test the 200-day moving average. So if you're short this one, you don't want to see it close back up above the 50. And A, B, and B, you're in an uptrend. You stay long as it stays above the T line. Wouldn't want to see it trade back below the T line. That would tell you the wind is out of the sails. Is it possible to be net profitable, positive expectation by totally ignoring first half of trading day and just using candles during the latter half of the day? I have no idea. No idea. A lot of times, the major portion of your price move and a candlestick signal comes in that first 45 minutes of the day. Tiva, 3 days ago, yes, but then it didn't confirm. So if I was doing my scanning at night and saw this, what would be your trading strategy? Buy on positive trading. Well, look where it opened. I told you didn't want to touch this one. Now you got a kicker type signal. So now it might be more apt to be buying. Just be aware that your percentage move just up here is not going to be anything hellacious. Apple came right back down into the trading range. That's not good. That kind of bearish belt hold signal tells you there's no bullish strength right now. Gold. Let's do this. ECAM 21. Gold just kind of drifting sideways. And GDX, if you're short, you stay short. We did Freeport. We did Quantum. Fuel cell. Nothing exciting there now. If you've stayed long, it has to open positive and trade positive. If it opens lower, you can see how the trend is still pushing to the downside. ALGN, that's not good. There's your bearish belt hold, bearish left-right combo. You get ready to short that one. Oh, FT, why would you even think of staying long? If this opens lower tomorrow, it'd probably be a good short coming back to the 50. Oh, you were doing riot. I thought you were saying not. Couldn't figure out why you were saying not. Riot, nothing. Mara, nothing. I'd be someplace else. Neil, I'll save you from doing a lap. Muds, long-legged doji in the overbought area. Use your doji rule. This one's going to move in the direction of how they open after a doji. And close failed at the 200. If this one opens lower, close it out and find someplace better. ASX, all you can do right now is stay long on this as long as it stays above the T line. And HPE, nothing exciting here, just a slow, steady eddy as long as it stays above the T line. Ears, too late for ears. No, it's probably even too early for ears. If you like it, you can be buying it. It's just not a very exciting looking chart. Ear. Zeus. No, you could still be buying this one, anticipating that now you just broke out. Just keep a safety stop someplace. Now that you're up and you're in the overbought area, if I was buying this one tomorrow, I wouldn't want to see it trade back below today's open. No. Oh, it's a bullish flutter kicker. Open lower, gapped up, doji, a bullish double doji, a double flutter kicker signal. And if you took out these little flutters, you basically have a kicker signal, which is a very strong change of investor sentiment. CCS, find out why they gapped it up. Expect a 45 degree off of here. CBD, just a slow uptrend. All you can do here is stay long. I know it's past 2, but I have to log in multiple times. Let's see, did you see clothes and muds already? Costco. Uh-oh. That's a J-hook pattern setup. You could buy this as soon as it comes back up through that level. I don't know what to call it. I just call it a bearish best friend. The silver contract slowly rolling over also. Will, yes. That's why in these market conditions, you still want to be very attentive to which sectors you want to be buying. Not all sectors are going up. So that's where the simple scanning process of looking for the strongest signals help you out quite a bit. Blink backed off after a breakout yesterday, but it came back up not only through the T-line, but back up to the 50. You could still be a buyer of this one, anticipating coming back up to this level if it comes back up through today's open. Yeah, you probably want to be closing this one out if this one closes below the T-line. Yeah, neither one of those are, but these are the type where because they had activity over here, now this is not unusual, and this is something we're going to do an observations session, I think, one Saturday, and it's not anything more than going through what human nature does. When you have a big spike up like this, and then you hit the bulls and the bears, they will usually go flat for quite a while until the next buy signal. And I know that because I've gotten into so many of them after they went flat, hoping that new interest would come back in and take them back up again. And they never do. UCOM, that's a message, meaning something gapped this up but sold it off, profit taking. Now you wait for the profit taking to be over with a doji, a hammer, a bullish harami, something, and then see, then you can start buying. All right, thank you, Winnie. And Galt, there's another example. Here's a perfect place to take your profits. When it opened positive today and started trading positive, look how far away you were from the T-line. So number one, you could have gone to your 10-minute chart and taken profits. Two, if it opened and traded positive, gapping up in the overbought condition that far away from the T-line, you immediately put your stop at where it opened because logic says if they come back down through there, that far away from the T-line, that's the exuberance at the top, start taking your profits. You should be out of this one. That's a big dark cloud in the overbought condition. You should have closed that one out sometime today. Just stay long on this one. Not very exciting, but heading in the right direction. VXRT, gap up shooting star, almost overbought. Yes, but not overbought, just still coming up. So the reason you could still be buying this one on positive trading, meaning especially if they come up through today's open, is because this broke out of a fry pan bottom. There could still be a lot more. This I forget what the information was. Oh, was this the one that has the oral vaccine? A fuzzy buzzy. That's right. Boo boo. All right. No, this is not a dark cloud. Remember, a signal is not a signal unless it's occurring at the right conditions of the stochastics. Now, there's a bearish left-right combo failing right at the 200. Now, it is a dark cloud in the sense that it's got a dark cloud formation. Even though you're not in the overbought area, what's it telling you? It's telling you they're not going through the 50. I would have closed it out today if I hadn't closed it out that day because it needed to come right back up and do a bobble breakout, which it didn't do. So I'd have closed this one out. Dominoes. This is where you get ready to take profits. Where do most people buy? They buy exuberantly at the top. Look. Yeah, that's no for the percentage move. Yeah, that was the old. That's for the institutional traders. We're still playing this one pretty heavy, OCGN, because of the percent move that if they open this positive, they could take it back up into this range, wave 1, wave 3. HVAC. Whoops. HYAC. Oops, I can't see anything on this one. Did this just gap up? And there's nothing there. Can't see anything. All right, everybody. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.